The crypto world is an untamed jungle. It's vast, it's chaotic, and it's filled with opportunities that can change your life, if you know how to navigate it. But let's be honest, most people are wandering through it blindly. Every day, new crypto projects pop up, each promising to be the next big thing. New coins, tokens, DeFi platforms, and NFTs, they all come with their own set of promises. But most of them will never fulfill those promises. Most will fade into obscurity, and their investors will be left with nothing but regret and lost money. So, let me ask you this, are you prepared to conquer the crypto jungle? Are you ready to rise above the chaos, to spot the diamonds hidden in the rough? Or are you going to be like the masses, following the hype, chasing trends, and getting burned by false promises? Here's the brutal truth, the majority of crypto investors don't make it. They get caught up in FOMO, fear of missing out, they jump on projects with no real value, and they lose everything when the market corrects. But you're different. You're here because you want to learn how to analyze and choose the right crypto projects for success. You're here because you're ready to put in the work, to think critically, and to rise above the noise. Today, I'm going to give you the blueprint. I'm going to teach you how to cut through the hype, how to find the projects that will stand the test of time, and how to position yourself for long-term success. This isn't about getting rich quick, this is about building sustainable wealth in the wild, ever-changing world of cryptocurrency. Let's dive into 5 critical steps that will guide you in analyzing and choosing the right crypto projects. Because if you get this right, you won't just survive in the crypto jungle, you'll thrive. Before you put a single dollar into any crypto project, you must understand its fundamentals. This is where most people go wrong, they don't do their homework. They get caught up in hype, flashy websites, and big promises without ever digging into the core of what the project is really about. But you're smarter than that. So, where do we start? We start with a simple but powerful question. What problem is this project solving? Every great crypto project solves a real problem, whether it's in finance, technology, supply chain, gaming, or even art. If a project isn't solving a problem, if it doesn't have a purpose, then it's just a gimmick. And gimmicks don't last. Let's take Ethereum as an example. When Ethereum launched, it wasn't just another cryptocurrency. It introduced the concept of smart contracts, self-executing contracts that live on the blockchain. This was revolutionary. It solved a real problem by enabling decentralized applications, dApps, to run without the need for intermediaries. That's why Ethereum became the second largest cryptocurrency in the world. Now, ask yourself, what problem is the project you're looking at solving? If you can't answer that question, then it's probably not worth your time or money. Next, we look at the team. Behind every great project is a great team. Who is leading the project? Do they have experience in blockchain or related fields? Have they successfully built other companies or crypto projects before? The team matters, big time. If the team isn't transparent, if they don't have a track record, then you should proceed with extreme caution. A strong project starts with strong leadership. Look at projects like Cardano, led by Charles Hoskinson, one of the co-founders of Ethereum. Hoskinson's reputation and vision helped establish Cardano as a major player in the blockchain space. The team gives credibility to the project. Lastly, take a hard look at the technology. Is the technology behind the project robust and innovative? Or is it just a copycat of another project? You need to understand the tech because crypto is built on technology. It's not enough for a project to have a great idea, it needs to have solid technology to back it up. Go beyond the white paper, read about the platform, understand how it works, and assess its scalability. Once you understand the fundamentals, you need to dig deeper into the project's utility. Here's a critical truth about the crypto space: speculative hype can only take a project so far. Eventually, the hype fades, and what's left is the utility, the real-world value that a project brings to the table. Ask yourself, what real-world problem is this project solving? More importantly, how is this project being used in the real world? Does it have partnerships with businesses or governments? Are developers actively building on its platform? Are people using its token for real-world transactions? Let's look at Chainlink. Chainlink isn't just another cryptocurrency. It connects smart contracts to real-world data through decentralized oracles. This has massive implications for industries like finance, insurance, and supply chain management. Chainlink is being used right now by real companies to solve real problems. That's utility. That's value. If the project you're considering doesn't have a clear use case, if it's purely speculative, then you're gambling, not investing. Speculation might make you money in the short term, but utility is what creates long-term value. You need to focus on projects that have the potential for mass adoption and that are solving real-world problems. Another great example is Uniswap. Uniswap revolutionized decentralized trading by creating a decentralized exchange, DEX, where users can trade tokens directly from their wallets, without the need for a centralized exchange. It solves the problem of liquidity and trust in a decentralized ecosystem. This isn't just speculative hype, it's real-world utility. Always ask yourself, what problem is this solving, and how many people will use it? If the answer isn't clear, move on to the next project. The next step is one that too many people overlook: tokenomics. Tokenomics refers to the economics of a token, how it's distributed, how it's used, and how it will increase in value over time. If you don't understand the tokenomics of a project, you're setting yourself up for failure. Let's see some key elements of tokenomics you need to evaluate. Supply and distribution. How many tokens are there in total? How many are currently in circulation? Is there a large number of tokens held back by the team or early investors? If a project has a massive supply that hasn't been released yet, you need to be careful. Token dilution can crush your investment. Bitcoin's limited supply of 21 million tokens has driven much of its value. As demand increases, the limited supply creates scarcity, pushing the price higher. On the flip side, if a project is constantly issuing new tokens, your investment could get diluted over time. Utility of the token. What role does the token play within the ecosystem? Does it have a real use case, or is it just a speculative asset? Tokens with real utility tend to hold their value better over time. For example, Ethereum's ETH is used to pay for transactions on the Ethereum network, giving it intrinsic value beyond just being a store of value or speculative asset. Inflation or deflation mechanisms. Some projects continuously mint new tokens, which can dilute your holdings, while others have deflationary mechanisms, such as burning tokens to reduce the supply over time. You need to understand the long-term impact of a project's inflation or deflation model on the token's value. Look at BNB, Binance Coin, as an example. BNB has a token burn mechanism where Binance regularly burns a portion of its tokens, reducing the total supply. This deflationary model creates scarcity and supports the long-term price appreciation of BNB. The tokenomics of a project can make or break its long-term potential. Don't invest in a project without first understanding how the token works and how its value is expected to increase over time. The fourth critical element in choosing the right crypto projects is community and market sentiment. The crypto world is decentralized, which means that the community plays a massive role in the success or failure of a project. A strong, active, and engaged community can push a project to the moon, while a weak or disinterested community can signal that the project is going nowhere. Does the project have a passionate, engaged community? Are people talking about it on social media, forums, and blogs? Is there ongoing development? A thriving community is a sign that there's real excitement and belief in the project's future. Take Solana, for example. The Solana community is one of the most active in the crypto space, with developers constantly building new decentralized applications, dApps, and decentralized finance, DeFi, projects on the platform. This level of community involvement creates momentum and drives the long-term success of the project. Community sentiment is often a leading indicator of a project's future. If the community is excited, engaged, and growing, then the project has a much higher chance of success. Look at projects with active communities that are constantly building, developing, and expanding. This is where you'll find the hidden gems with massive potential for growth. But beware of the hype. Sometimes communities can be artificially inflated by bots or fake engagement. Look for genuine, sustained enthusiasm rather than short-term, manufactured hype. Look for a strong core of developers, advocates, and users who believe in the project's mission and are working together to build its future. Finally, even if you've found the perfect project with great fundamentals, real-world use cases, strong tokenomics, and an engaged community, timing is everything. You need to know when to enter a project. Buy in too early, and you might catch the project before it's fully developed. Buy in too late, and you could be buying at the top, just before a major correction. Timing the market is never easy, but you can increase your chances of success by understanding market cycles. The crypto market goes through cycles: bull markets where prices skyrocket and bear markets where prices cool off. Understanding where we are in the cycle can help you make smarter investment decisions. For example, buying during a bear market or after a major correction can give you the best opportunity for long-term gains. This is when great projects are undervalued and when the smart money is quietly accumulating. On the flip side, buying during a hype phase, when prices have already gone parabolic, can lead to disaster. You don't want to be the person buying the top of a bubble. Learn to recognize market sentiment and use it to your advantage. Don't chase pumps. If a project has already gone 10x or 20x in value in a short period of time, you might be too late. Instead, focus on finding projects that are undervalued but have strong fundamentals and the potential to grow. The crypto world is filled with opportunities, but only for those who approach it with intelligence, strategy, and relentless determination. Choosing the right projects isn't about luck, it's about mastering the art of analysis. It's about digging deeper, understanding the core of a project, evaluating its real-world potential, and ensuring the tokenomics and community support long-term success. Are you ready to take control of your future? You now have the tools to analyze and choose the right crypto projects. You're not just another investor chasing trends, you're a strategist, a visionary, a champion. The path to success in crypto isn't easy, but it's clear. You either take control, analyze carefully, and execute with precision, or you get left behind. Today is the day you decide to rise above the noise, to become the investor who sees the opportunity, not just the hype. This is your chance to thrive in the crypto jungle. Now, go out there and claim it. If you found this video helpful, don't forget to give it a thumbs up and subscribe to my channel for more crypto and blockchain content. Sharing this video with your friends and family helps me reach even more people. So, hit that share button and let's spread the word together. Thanks for watching.